The small cap story is an interesting one because it blends in so much about the interest rate environment,
Yes.
the economic prospects out there, and whether or not there is a catch-up trade to be had. What do you think? Is the small cap story just in the early innings right now?
We think so. We think that there is a pretty powerful catch-up trade that's ahead of us, and a lot of the things you've been talking about, the financial conditioning's tightening, even going back to November of 2021 when Chair Powell was reappointed. You saw a very high velocity tightening of financial conditions, which had a large impact on small cap stocks. And we had expected, and we're wrong, that would kind of come off a little bit in 2022. But the Magnificent Seven and other large cap stocks took a lot of the airtime and oxygen away from the small cap space, and it really exacerbated the move and made it quite substantially painful for most of this year. This last month or so, we've started to see what we think is a more realistic picture of what we expect for next year, as the earnings are quite good, and we're very, very optimistic, with some evidence behind us that this is the start of a really strong small cap cycle.
If the rate story was what, in your mind, drove a good portion of the underperformance in small caps, the rate story has shifted now because the expectations being built in are for rate cuts, perhaps sooner than the Fed has indicated they will happen in some of their commentary. If that's the case, how much of that small cap story is tied to whether interest rates can continue lower as opposed to staying more steady?
I think when we look at the sort of the backdrop and the history of small caps, been doing this for almost 3 decades, if we just stay here, I think it's a pretty favorable tailwind for small caps. If we start to see lower rates and a Fed easing cycle, I think that just adds fuel to the fire, especially in some of the sectors we like tech, consumer, and healthcare, because those tend to respond very nicely to those lower interest rate environments. And I also think, just financial conditions themselves loosening, not just rates, but energy prices as well, down, kind of mid-teens from their recent highs, also are a nice backdrop to invest in a sector that seems to be more dependent on the backdrop than the underlying.
Part of the small cap story overall is about the under coverage that many of these stocks get, which is why there's alpha and outperformance to be had. Take us through some of your stock picks before we let you go here.
Yeah, it's a more inefficient market than I've seen in almost 2 decades, and I think that one of the things is that things get painted with a broad brush. A company like Exonics, a $2 billion, $3 billion med tech player, really got overcooked to the downside because of this GLP-1 obesity drug dynamic. And I think you have a 20% grower, both top and bottom line, in areas that are really not impacted by any of these obesity drugs. So we're pretty optimistic on that one. A company like Boot Barn, not a well-known retailer, only 345 stores in the United States. They're opening one by us, which is in New Jersey, down in Monmouth County, and I think it's going to be quite interesting because it's not a very well represented store on the East Coast, but Yellowstone theme, work boots, Carhartt, really iconic type store, well managed, high economic, unit growth story, and then a company like Onto Innovations in the chip space, really kind of building the blocks of the AI food chain and doing so in a way that we think is going to outgrow not just their peers, but I think kind of become much more important to the space overall.